Hello and welcome to this special episode of Akrinos Access, episode 3 of a 3-part series. We're welcoming Adam Cmejla, the founder of Integrated Planning and Wealth Management and the host of the 2020 Money Podcast. Welcoming Adam here to Akrinos Access as we're exploring the world of financial planning around your practice transition. In episode 1, and if you missed it, be sure to go view it. In episode 1, Adam shared with us a bit about the importance and some insights and strategies and how to plan for your transition prior to the transition, leading up. In episode 2, Adam shared some insights as far as what to be prepared for in the year of your transition. Be sure to check that out. Some really great pearls there. And now here in episode 3, we're jumping into financial planning for your transition post-sale. Adam, thank you so much for joining us here on Access.
Thank you, Eric. Always a pleasure to be here. Looking forward to kind of tying a bow around these different transitions, right? I said in the first episode, up to, through, and now after. I still haven't figured out what that third alliteration to and through is, but we'll just stick with after. So, this idea of transitioning after selling your practice, remember in part 2, I really emphasized the importance of emotionally preparing for the sale of your practice and understanding that you're going to be going through some type of grieving process. And that is still, everybody, quote unquote, grieves, everybody transitions in a different way. And part of the way in which we've seen that manifest itself in practice owners that sell their practice is, what does life look like for them personally and professionally on the other side of the transition? So if you're doing a clean break, sell, here are the keys, walk away, I'm done with CE, I'm done with everything, that can be a little bit potentially harder of a transition than those that might, what we would call, kind of sunset away. They go, they sell their practice. I only want to see patients 1 or 2 days a week. Then they still want to have that flexibility. And I think that for ODs, that is different, especially practice owners, that is, I shouldn't say especially practice owners, but ODs in general, as a profession, as someone that dispenses the care that you dispense to your patients and the experience that they have, it's a very sought after skill. I mean, so this idea that you have the flexibility to define to what extent you're still a practicing optometrist post sale. And part of what can influence that is back to part 1 of the episode, right? How much, at the end of the day, what we're all solving for here, everything that Eric and I have talked about in now 3 episodes, the common denominator, what we're solving for in all of this and what everybody is solving for is, at some point, when I define financial independence, do I have enough money? Do I have enough wealth? Do I have enough income, right? I don't care about wealth. I care about income. The whole goal is to transition assets into an income stream that I can live off of. Through my assets, will I have enough income to live the on-purpose life that I aspire to have post-sale? And one of the arrows in the quiver that optometrists can pull, which we've seen across the gamut, is potentially practicing part-time. So don't discount that, and now again, that you may never want to do that. This goes back to wanting versus willing. You may never want to do that, but are you willing to do that because your financial plan, the amount of assets that you accumulated relative to what you need your portfolio, your net worth to provide, they may not be a match. And this is, again, going back to the importance of planning. A lot of what I'm going to talk about here is going to be specifically generic, right? It's specific in nature, but it's obviously generic and not applicable to your situation, hence the importance of planning. And so that's the first benefit that you have, is you have that flexibility to define to what extent you still have optometry as your profession, as an income stream in retirement. Side note, I wish Florida would make it easier for optometrists to become board certified and be able to practice, because we've had conversations with ODs that I'd love to retire to Florida or be a snowbird and practice down there, but man, I really don't want to study and pass the board. Like, I wish there was a little bit more portability. Maybe that's a different legislative push that we can have at some point in the future. But again, understand the constraints in which you can practice and try and determine, does that fit into your plan? Second, if you own real estate, this is another arrow in the quiver that you have a little bit more flexibility around. And part of this can be built into the purchase agreement when you sell your practice as well. We've seen terms and conditions that say, I will own the real estate and there's no offer for, like if this is an OD to OD sale, Eric, I'm going to sell my practice to you, but I'm going to hold the real estate for at least 3 years. After 3 years, if I choose to sell, you get first right of refusal to buy the building. We've seen it set where in the practice, you will buy the building in 3 years. And if you don't, I'm going to sell it to someone else because I want out in 3 years. You have the autonomy and flexibility to build the sale of your real estate if you have that. On the other side, this is one of the benefits in selling to private equity. Private equity is not interested in your real estate. So if you really want to hang on to the real estate as part of your long-term portfolio and the income that you get off the portfolio, or excuse me, the income that you get off your real estate, holding on to your commercial real estate in perpetuity is a great way. We're big believers and big fans of having real estate as part of your portfolio to some extent in retirement, because again, it's a way, it's one of the vehicles that you can use to turn an asset into an income stream. So that's the second, the second thing that you have. And then from there, those are probably the two variables that are most important for ODs to consider in the couple of years after they sell their practice. From that point forward, we kind of joke in our firm, what do you call an optometrist that the year after they sell their practice? Any other retiree. Like from there, now we get into kind of I did this in the first one, the yawn type, boring financial planning topics, but I don't want to discount them because they are still so very important. The number one thing that I would say as we kind of transition into the boring part of financial planning post-sale, but still nonetheless important, is understand what your tax liability is in retirement. Now more than ever, you want to make sure that you minimize the amount of taxes that you pay. One of the ways that you can do that as an OD that sells your practice is in the first couple years of selling your practice. What typically happens for practice owners is you have 3 different buckets. Can I draw here real quick, Eric?
Absolutely.
All right.
Yes,
this is a beautiful thing of video and having a frosted glass here. So
love it.
The idea here is eventually people want to retire with 3 big buckets. I know I did a cardinal sin. I turned my back to the camera. One of the things that we do that we want to have here is to have 3 different buckets of money. This first bucket that we have is our tax-free bucket. And this is where you would have your Roth IRAs, basically your HSAs for qualified healthcare expenses, maybe what's called a 401h, which is a single, I don't get into details here. This is your tax-free asset. Here is your taxable account, or tax deferred, I should say. And this is your traditional IRAs, your traditional 401ks. This account, when you take it out, you pay taxes when you take it out. And this one over here is what we would call your taxable account. This is going to be your brokerage accounts. It doesn't have the protection, if you will, of a 401k or any other retirement account. This is the bucket when you sell your practice. This is that bucket. Here's the benefit of understanding the tax issues that affect each one of these 3 buckets. In the first couple of years after you sell your practice, one of your goals could, and dare I say should potentially be, to figure out a way, how can I shift as much money from this bucket over into our tax-free bucket? And one of the low-hanging fruit opportunities to consider are something called Roth conversions. And the best way to do that is to, again, go back to figuring out how much income are you getting. And when I say income, I'm talking Social Security, if you turn that on. I'm talking pensions, if your spouse has a pension, or if there's a pension income in your family, real estate income, all of the different income streams. Understand the taxation issues, the taxability of that income, because now it comes back to how do we fill up tax buckets and how do we shift as much as we can from the tax deferred bucket into the tax-free bucket. And typically, if we got a big distribution, if we had a big windfall of assets from our sale of our practice, in the first couple of years, this money here can essentially serve as quote unquote tax-free income because you received it as cash. You already paid taxes on it. It's now sitting there. What do you do with it? And so the benefit in doing that, in using, again, potentially using, if you need money off of your investment portfolio, taking distributions from the taxable side allows you to reduce the amount of income, the amount of money that actually shows up as taxable on your tax return. And what that allows you to do is to shift money in an extremely low. We've done it where a client has paid 0 in taxes on some of their Roth conversion because their income was basically non-existent in the first couple of years after selling their practice, because we basically kept some of that set aside as cash to help pay for living expenses in the first 12, 18, 24 months post-sale. So I can't emphasize enough, if there's one area that I would emphasize to impress upon practice owners in the first 36 months after selling your practice, is understand the taxability of the assets that you own, and how when you take money out of those accounts, where or if it shows up on your tax return. Everything else, the asset allocation, the diversification, yes. I mean, do we do that at our firm? Yes. Is that important? Absolutely. The goal is to grow wealth, right? But from a value perspective, from an impact and the ability to keep as much of your money as you can and not ship it off to the proverbial life partner that we have, whose initials are IRS, the benefit in doing this planning up front means that you can limit the lifetime tax liability, almost had some alliteration there, the lifetime tax liability that your family has, thus ensuring that A, you have enough money to last your lifetime, and B, if it's important to you, that you have generational wealth that you can do and pass on to your kids, to your family, to charities and causes that you care about the most. The less you pay in taxes, the more you have to give to those that you care about. So that's the biggest thing that I would emphasize. With that, any additional thoughts or points that I can clarify, Eric?
Man, I think what a fascinating conclusion here to the series, right? So we started in episode 1. We were talking about financial planning for practice transition going into it, right? Where this is some future date in the future. And I recall you mentioned that 3 years is kind of the magic number, but also we stress the importance of it's never too early to start. And that's a big message out to you younger practice owners out there, right? In episode 2, then we jumped into financial planning during the transition and the importance of understanding, hey, in the year that the transition will take place, it's very important to have that financial house in order and have an understanding of some of these tax implications that are going to take place. And then now here in episode 3, pull it all together, it's quite fascinating, right? Financial planning for that practice transition after the sale to realize 3 critical factors. One is the flexibility of you as a retiring optometrist, that you still are an optometrist. So there is that flexibility to still be able to earn income on your terms, right? Part-time basis, what have you. That second piece you mentioned, real estate, and I know a lot of practice owners do end up owning their own building, owning their office. So it's important to understand and factor in that real estate into the financial plan post-sale, realizing that real estate will function to generate income. It also will remain an asset, right? Then that third piece, which I think you did some great stuff, kind of giving us a crash course in understanding taxation. And I think that is, you really nailed it there as being incredibly important to preserving that financial independence that you've been striving for all this time. So, Adam, man, this has been a fascinating series of conversations. And I suppose as we're kind of closing it all out, and folks want to connect with you to continue the conversation or what have you, how can they find you? And also be sure to plug the podcast. And big shout out to all the viewers. If you were yet to listen to 2020 Money, wow. So yeah,
and it's not just because Eric has been a guest a couple of times, which he has been. So if you really want to go back, you can search through the table of contents. Eric, yes, has been a guest in the past, and we certainly have some conversations lined up in the future as well. So little beneficial serving here, but yes. Everything that we've talked about wait for it, is integrated. So where can you learn more about what we're doing here? Integratedpwm.com is our firm's website. Everything about what we do and the content that we're putting out there is available on the website, including 2020 Money podcast. We'll have information on the 2020 Money community. That's also going to be, it's kind of an offshoot from the podcast, giving ODs a safe place where we can all grow together, some financial tools, checklists, and resources for you as optometrists to take more control of your money and do it in a community fashion where there's some we've got some very interesting things and very exciting things planned in the 2020 Money community. All that is available again on the website, integratedpwm.com. Podcast is available on any platform wherever you get your podcasts. Just search 20/20 as in refracted down to 2020. That is the best way to find the podcast on any platform. So Yes, Eric, thank you so much for allowing me to share in these conversations. I hope it's been as enjoyable for viewers to watch as it has been for me to engage in the conversation with you. So again, thank you.
Absolutely. And Adam, on behalf of our viewers and all of us here at Akrinos, thank you so much for joining us in this three-part series, sharing your wisdom, sharing your insights, and delivering some really great pearls around financial planning for your practice transition. So to all of our viewers, thank you for tuning in. On behalf of all of us here at Akrinos, Eric Cmejla signing off.